All right, this is Todd Toback's 2023, maybe fully inaccurate market forecast, but I'm going to do my best. But most importantly, I'm going to teach you how to make a ton of money no matter what the market does. So here are my predictions and how to adapt with the new market. So my first thing that I'm going to mention here is that these techniques that I'm going to talk about, along with my predictions, they always work. And I'm talking about the technique. So even if I'm wrong, you can make money. And the things that I'm going to tell you to do, they are controllable. The things that you can do in this market to make money no matter what they do. You should make money whether the market's going up, down, or sideways. And so there's no use in freaking out about what the market will do in terms of, hey, you have to focus on the controllables, right? I can't focus on the price of real estate, but you can focus on how you are going to take action every single day. So my first prediction for 2023 is that interest rates will continue to go up throughout the first half of 2023. Now, the Fed has come out and said, hey, we're going to continue to raise interest rates, but not as aggressively as we did as in 2022. So what does that mean? It means that we're going to continue to increase, but just not as aggressive. Could I be wrong? Maybe. But that is what I am seeing. So what will that mean? Well, if interest rates go up, typically that will mean that mortgage rates will go up. The price to get a mortgage, the monthly payment that a homeowner is going to have to pay when they get a mortgage to buy a property, that will go up. So you will see over the last, 4 or 5 months, interest rates have really skyrocketed, and you've seen purchasing power go down, right? The monthly payments have basically shot up on people, and so they can afford less house. When interest rates continue to go up, you're also going to have the media talk about this and what the housing market has done. We're going to start to see more of a slowdown. And my prediction is that prices will continue to decline in most markets in 2023. What is the rate of that? Hey, you know what? I don't know, but only time will tell. I could tell you that in my Florida markets and San Diego markets, I've seen a pretty significant decline, and I expect that to accelerate over time. Okay, well, what does this mean? What do I do? Well, I can tell you right now that rehabbers are going to start losing money. Now, if they have not already started to lose money, they are really just now starting to feel the heat. And what I mean by a rehabber, it's someone maybe who they bought a property with the intention to fix and flip, and they're sitting on it. And typically, not always, the time of when you buy a property, you fix it up, you put it on the market, and resell is typically 5 to 6 months. Here's the interesting thing, is that this market slowdown really didn't start until July or August, right? And so we raised interest rates, and it takes, a number of months for that to hit. So right now, the inventory that fix and flippers have kind of, bought and resold and fixed, they're just now kind of on the market and sitting on the market, and they're just kind of starting to come to realization. And so there's a delay in the reality of that setting, of the acceptance that this house that I thought was going to sell for $350 is now only going to sell for $300. I can tell you that's a tough pill to swallow, right? I've swallowed that pill before. And so what I'm starting to see right now is that the market is starting to slowly realize it. But in 2023, we're going to start to see an acceleration of fix and flippers starting to lose money, and in general, prices starting to decline. So what does that mean? Well, a rehabber loses money. If they decide to stay in the business, they are going to get a lot more conservative on what they are going to pay. Okay, that goes for retail buyers also, because just psychology, they don't want to buy a bad deal, something that's going to go down in value. But rehabbers specifically, man, they get really jittery. So what does that mean? That means that you need to put on your negotiation pants on. You need to negotiate much deeper discounts. I can tell you what, if you have not purchased my no limit selling system, you got to purchase it. All right. This is going to tell you how to do much bigger deals, much bigger spreads, how to negotiate the right way without chasing sellers, compressing timelines. Go ahead and check that out. No Limits. Check it out, NoLimitSalesSystem.com. And look, if you can't afford to invest in yourself, you can listen to free stuff on the podcast here and piece it together there's enough value there so that you could make that happen if you're totally broke. Okay. But my recommendation is to invest in yourself. Okay. So what is my recommendation to you? Is you're going to have to negotiate deeper. What is that number? At least 15 to 20% lower than you were before. That is a general number, but I can tell you what, you're like, whoa, Todd, on a $300,000 house, that's the $60,000 haircut. Yes, that is the numbers. Numbers don't lie. That's what we're seeing. And I expect that to get bigger and bigger and bigger and bigger. Our team made an offer this morning with a realtor, right? And basically total sticker shock. She said, no way. You know what? I tell you what, I bet you that seller is coming back to do that deal with us. Very, very important. Okay. So that's my first prediction. Prices, interest rates are going to go up. Prices are going to continue to accelerate. You're going to want to negotiate much, much deeper. My next point is you're going to have people who have cheap interest rates needing to sell. Now, this one is going to get juicy. I haven't talked a whole lot on how to capitalize this in the past, but I'm getting really excited about it. So anyone who's bought, I don't know, in the last 1 year to 5 years, man, they bought with historically low interest rates. We're talking 4%, 3%, even 2.75% interest rates. And I got to tell you what, that loan is absolute gold. The problem is a lot of those people are not going to have a ton of equity if they bought in the last year or two. Right. And so now they have this amazing loan on the property. They thought they were going to be able to sell their property for $350. Now they can only sell it for $280. What are they going to do? Well, most people aren't going to come out of pocket to sell their house. I mean, that's just mentally brutal for most people. But a lot of these people do have something value that they don't know. And that is an interest rate in which you can capitalize on. Oh boy. What does that mean? Well, in walks in subject to investing. Did you know that you can buy a property, actually get the deed, own it, have full ownership of that property by having that seller deed the property to you and taking title subject to that existing financing in place? What does that mean? That means that you just leave that loan in place without paying it off. Yes, you can do that. Right? Am I talking about assuming a loan where you go to the bank and get approval and found all this paperwork? No. I'm talking about getting the deed, getting ownership, and leaving that existing loan in place by then now continuing to make the payments. Yes, you can do it. Yes, it's legal. And it's been done for as long as mortgages and people have in real estate. Leaving that existing debt in place happens all the time in commercial real estate. By the way, as a matter of fact, this little box used to exist on the realtor forms that said take title subject to the existing financing. That happened when interest rates got really, really high and people needed to take advantage of lower interest rates. And I tell you what, I think we're heading back into that 80s environment where we're going to take over old loans, which I am so excited about. So what does that mean? It means that you could take over a property, little to no money down, with a super low payment on a property that you could keep and rent out and hold for long-term equity appreciation. Okay, so let's pretend like you buy a property and the seller owes $300,000 on it. It's worth about $300,000. Monthly payment on it is, I don't know, $1,200 before taxes and insurance, and the seller needs to get out of Dodge, right? They can't sell it because they're going to have to come to the closing table with cash. They don't want to do a short sale. They want to move out of state, right? Now you can buy that property, get the deed, take over the $300,000 loan, just start making those $1,200 monthly payments. And guess what? Now you rent that property between $1,800, $2,000 a month. You know what's going to happen in 10 years? The balance of that loan is going to go down. You're going to start to pay off that loan. And so now your equity is going to go up. And the value of that property will probably double in 10 years, right? Maybe, hopefully, can't guarantee it, but sounds pretty good to me, right? That's what real estate over time does. And I tell you what, you could build some long-term wealth this way, and a lot of your competition is not going to see these deals. So subject to investing is going to make a comeback. All right. So that is my second prediction. My third prediction is that hard money lenders are going to be leaving the market. Okay. What are hard money lenders? Hard money lenders are the lenders who actually give the money to fix and flippers and investors in general, right, to go and buy a property and fix and flip it. It's the funding. And over the last 5 years, the hard money lenders have exploded because you get a good return being a hard money lender. Well, that happens when nobody's losing money and everyone's at this party and everyone's like, yes, this is amazing. But as soon as the rehabbers start losing money, that's when the hard money lenders start losing money. And their appetite for risk, right? The risk that they're willing to take for the kind of return they're going to get back, they're going to say, whoa, 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 let's slow this down, Nelly. Let's pull over for a moment and regroup, right? The people are going to start to go to the sidelines. And so money is going to start to dry up. What does that mean? Well, it means that rates are going to go up. Hard money rehabbers are going to have to start to pay a little bit more money for the money. So they're actually going to have to pay less. But this is going to leave you actually with a big, big, big opportunity. And number one is that you actually can start to raise private money. Now, this may be a little bit more of an advanced tactic, but you could do it if today's your first day, right? But I would start to talk to your friends and family and banks and your lines of credit and start to extract or line up private money to buy other people's deals. So you're going to have a lot of wholesalers out there who have deals. You're going to have a lot of rehabbers who might want to joint venture with you, right? Who are going to need money to do deals. And a lot of rehabbers out there, they don't have a lot of cash. A lot of wholesalers don't have cash and they're going to need it. So you don't need your cash, right? But if you can get other people's cash to invest in other people's deals, man, oh man, that's when the magic happens, right? You now connect two pieces together. You also want your own money. Because some deals are going to be so good that you're going to want to take them down. That's actually buy the property and you're not going to be able to wholesale it. Or sometimes you're going to have like a really bad property with like a crazy tenant. It's full of stuff and it's got a big scary problem that it's not that big of a deal. And because you have cash, you can buy it. And because there's not a whole lot of hard money lenders in the market anymore, right? They're going to start to leave, right? There's going to be less lenders. So now you can buy it. You can get it vacant. You can just clean it up. You don't have to fix it, right? But now you could solve a big problem because you could take down this deal, right? And stick it right back in the market and make $100,000. And that is not an exaggeration, right? Things are changing. And I'm telling you what, we are entering the opportunity of a lifetime. Some people are going to freeze up during this change. And I'm telling you what, I want you to get ready to put on the accelerator and hit go. Because opportunities are coming. We're making money right now, but I got to tell you, the best is yet to come. And I tell you what, I think this is going to be an opportunity of a lifetime for many, many, many people. Here's the other thing I'm going to tell you, and this is my final prediction. I think that we are going to lose 50% of rehabbers and wholesalers. That 50% of rehabbers and wholesalers are going to leave the business. Now, some of you are going to be like, oh, I don't like this market change and I'm confused and I don't know what to do. Maybe you're part of that 50%, right? I hate to say goodbye. However, if you're listening to this podcast and a follower of mine, you know, okay, that chaos creates opportunity. And I can tell you right now, in my opinion, okay, we are heading into one of the most amazing times to invest, right? And we are just raising private money. We're doing deals, we're buying stuff, we're operating throughout this market, we're profitable. And I tell you what, be ready for the opportunity of your lifetime. So my recommendation to you is go all out and completely dominate your competition. There's going to be a lot of people out there being like, maybe I should go do this new Bitcoin thing, right? Or whatever that is, right? But stay focused. Get really good. Listen to this podcast, and I tell you what, you are going to completely dominate your competition. So my very simple, but maybe completely wrong predictions for 2023, are number one, interest rates will continue to go up throughout the first half of 2023. After that, I'm not sure, but prices will continue to decline through at least the first half of the year. I'm going to recommend that you buy deeper, right? You negotiate and make that happen. 15, 20% lower. Yes, you can do that. Invest in the No Limit Sales System. Check out NoLimitSalesSystem.com. Okay. I expect to see a market decline. Again, rehabbers are going to start losing money, big money. Okay. Remember, you're going to have to negotiate deeper. You're going to have people with very cheap interest rates that are going to need to sell, right? Who thought they have equity, but now they don't. My recommendation is to take over that cheap debt subject to the existing financing and hold some of those properties for long-term wealth. I believe that hard money lenders will be leaving the market. Not all, but some, because the rehabbers losing money, which means that some of these hard money lenders, these private lenders who took some risks, they're going to lose some money. The funding's going to dry up, which means everything's going to get more expensive, which means you're going to need to buy deeper. Okay. I also feel like we're going to lose 50% of wholesalers and 50% of rehabbers in this business, which is going to leave the market wide open for the picking. You want to raise private money. You want to partner with people who have money. You want to joint venture, because I'm telling you, we picked up a deal, just so you know, 2 days ago that I'm telling you, it was like a 2012 price. It was a smoking deal. And we're going to make 60, 70 grand on it, because a lot of people have left the market. So I'm super excited for that and super excited for that competition. I got a gift for you. Make sure you head on over to nolimitsrealestateinvesting.com/script. Download that script if you've ever wondered what to say to a motivated seller and how to say it. That is my gift to you, and I will talk to you on the next episode.